I may have my personal qualms with the shit coins and the crypto casinos that are Binance and Coinbase, but at the end of the day, I think individuals are free to make decisions they want. If they want to trade shit coins and think they found the next Bitcoin, they should be able to do so. I think getting burnt is the fastest way to learn. It is sad how much money and capital has been wasted in that part of the quote unquote crypto sector. But again, these are lessons people have to learn.
My name is Max Gagliardi, and this is Always Be Building. If you're watching this video, take a moment, hit the subscribe button on YouTube, or you can follow me on your favorite podcast app. Hope you enjoy the show. Marty, welcome back to the podcast.
Max, it's been too long, sir.
It has been too long. We did, probably the last time we talked, maybe on your podcast, it's been over a year ago. Ton of stuff's happened. A lot of stuff in the Bitcoin world that I want to cover. And just a lot of things in general, the craziness around the world. But we've gone through a rebrand since you last came on, still doing a lot of energy stuff. And we'll probably talk a little Bitcoin mining here some point during this. But you're building a lot of things. The show is now called Always Be Building. You're just building a ton of stuff. Why don't you tell people that may not know what all you have going on?
A lot going on. The core of the banana stand, as I call it, or Always Be Money in the media company. That's my bread and butter, what I've been doing for 6 years now. The Bent turned 6 years this week, which is hard to believe. And so that's the newsletter.
Crazy.
And then on top of that, I do the podcast, plural. So TFTC, Rabbit Hole Recap, and now The Last Trade. A lot of that lives on TFTC.io. And that started as a media company to educate people about Bitcoin, and that's sort of morphed too. We've had a rebrand. TFTC stands for Truth for the Commoner. So while we focus on Bitcoin, we do like to branch out into sort of tangential topics that pertain to freedom and liberty in the digital age to extend an olive branch from Bitcoin to these other communities. And then on top of that, I'm a managing partner at a venture capitalist firm in the Bitcoin space, 1031. We write investments. We deploy capital into Bitcoin startups that are building out infrastructure in the space. We do invest in mining companies, security, finance companies, lightning companies, and that's been really successful. We deployed $100 million to date and are supporting a lot of really great companies in the space. And then beyond that, the mining as well. So as you know, me and Tom have Standard Bitcoin with our third partner, Matt, that we're building, and we're doing a lot of mining in Appalachia right now, northern Tennessee and southern Kentucky, and we're liking it. It's a really cool operation. We're doing both on grid and off grid, but really leaning into on grid at the moment.
I love it, man, so much. So I get this question people ask me, and I'll ask it to you: is like, how do you keep up with everything going on? Somebody who's doing an entrepreneurial path, you forged your own way. You've done a number of different things and had success, but how do you keep up with it all?
It's chaotic. I'm not going to lie. It varies from week to week, depending on what has the most pressing needs and priorities. But yeah, just trying to, I think that's the beauty of starting with the media and really leaning into that for 4 or 5 years before I started branching into the other things, whether it be mining or venture. It sort of acts as a base that keeps me sharp and forces me to stay up to date with everything going on in and around Bitcoin and tangentially. So I have a good grasp, a good information base, good landscape picture in my mind of what's going on in Bitcoin. And then that sort of naturally dovetails into what I do with venture and mining. It's just those two I see them as like a natural extension of the base I've built with the media company. And yeah, it's hard. Again, week in and week out, media company needs more attention one week, the mining company needs attention another week, and then venture, same thing, in and out. Venture is definitely and the media are probably the most constant. In the mining, I see myself as a sort of like a mercenary, drops in and gets stuff done when I'm needed. Tom and Matt are really running the operational side of things, and they have that down pat, and I'm very lucky that they're my business partners in that, and I sort of handle some of the biz dev and and financing stuff.
Well, it's like you build this like the media machine, which gets you distribution of ideas and distribution of yourself and content. And then like these things you're doing are kind of tangential in a lot of ways. Like you mentioned it drives because you're doing all this Bitcoin content and then you're meeting people in the space. You're meeting people that are interested in mining or interested in investing. And then you kind of play off those things. So it's not like you're taking these giant leaps into like totally different avenues. You're kind of basically just building on top of the foundation that you've made. And I think that that's kind of important. I think a lot of times people want to, I don't know, just get into all this random stuff, but it's like build one thing and then figure out ways to kind of put out tentacles into tangential things. Is that a fair way to look at it?
Yeah. And I think we've discussed this before, either on your show or mine, but content's like one of the most high leverage things you can do in today's day and age. And for me, particularly for what we're doing in Bitcoin, whether it be venture or mining, it just acts as like a top of funnel. Obviously, I'm talking to a lot of founders in the space because they're building the products that people want to learn about. And so it just creates a natural network of people who come on the show, develop a relationship, we become friends, I really get to understand their businesses. And again, it just makes it easy from the venture side of things, from a due diligence perspective on what they're actually building. And then the relationship side of things, developing a good relationship with founders and really understanding who they are and what they're trying to do. And then mining as well. Obviously, mining's a big part of Bitcoin, so we covered that pretty extensively over the last 5 years. And same thing, have everybody in the mining industry come on the show, develop that network out, and really, again, gives me a good information base from which to operate in the context of Standard. In Cathedra, I sit on the board of Cathedra as well. So, yeah, the content, particularly doing a podcast where you're interviewing individuals, has been the best networking tool or hack, if you want to call it that, in my life. And I never really started with the intention to do it that way. I was genuinely curious about what people were building and wanted to help get their messages out and teach people who are curious about Bitcoin what's actually going on. And then it just became a natural extension of that over time.
Yeah, man. Well, guys like you, like I didn't really realize the power of it early on. I was just kind of like, I'm just going to do this and see what happens. It wasn't like I had that in mind necessarily, but I've seen what you've done and others. And it's like, man, that's super powerful. And so it's good stuff. But pivoting off of that, I mean, I'm really interested to get your take on like the signature bank thing that happened. This kind of like some people coined it Operation Chokepoint 2.0. The SEC now filing these lawsuits, Binance and Coinbase, which I think a lot of people knew were coming. But just like your perspective as somebody who's in the VC space, only on the Bitcoin side, which I think you guys are probably pretty happy about right now, given what's going on. But like, just your take on this, and like, maybe it's an attack vector that is not directly on Bitcoin itself, but these other on and off rails. And I'll just let you kind of open riff on just your take of the stuff that's kind of unfolded over the last 6 months.
Yeah, it's been pretty chaotic. And Bitcoin only companies have seen both ends, or both sides of the double-edged sword that came with this banking crisis. I mean, number one, we are happy at 1031 because a lot of our portfolio companies, we really had this long-term view that crypto's noise, Bitcoin's a signal, and the people and the founders building on Bitcoin's base for the long term are going to have the most success in the long term. And that there was some regulatory problems with crypto that would come to a head, which seems to be happening right now. But alternatively, like the banking stuff has been a problem, and it's not really a problem, but it's something that we've had to really be on top of over the last 8 months, particularly when Tremor started with Silvergate last summer. And so that's one thing in 1031 we've really been focused on in the last 8 months, is being on top of our portfolio companies, understanding their banking relationships, helping them open up multiple bank accounts. And it's certainly something that Bitcoin companies have not been inoculated from. I mean, every one of our portfolios is fine. They have bank accounts, but when Silvergate went down, when Signature went down, and when Silicon Valley Bank went down, a lot of our portfolio companies had accounts with them. And as everything was going on, we had to be pretty proactive and like, hey, make sure you have multiple bank accounts set up and you can jump ship when the next bank fails.
Right.
But with that being said, there is a very small universe of banks in the United States that are willing to bank crypto broadly, and then Bitcoin only. Bitcoin only companies have a better chance of getting bank accounts, but it certainly is there is like a learning curve on the banker side of things to get them to understand, hey, we're different than crypto. Like you can check our business; it's pretty sound. We're not really commingling user funds or gambling with them like the BlockFi, Celsius's, FTXs of the world were. But yeah, that's the one terrible thing of the last year is that the banking industry is sort of throwing the baby, which is Bitcoin, and the Bitcoin industry out with the bathwater in a lot of cases. With that being said, there are some banks who get it and are willing to bank Bitcoin companies. But yeah, I mean, and then beyond that, that's the big question: is this chokepoint 2.0 as it pertains to Silvergate and Signature? I think that's where the signal is. And so Silvergate had this network called SEN, SEN, the SEN network, and that allowed crypto companies that had accounts at Silvergate to send funds between each other instantly, 24/7, 365. And as you know, Bitcoin trades 24/7, 365. And so that network was extremely valuable, particularly for exchanges that needed to amend their ledgers between each other on the weekends and after market hours. And then Signature had a similar network called Signet that did the same thing for companies with accounts at Signature Bank. And so when they both went under, it really destroyed that functionality of those two particular networks, SEN and Signet, which certainly is a road bump for the industry. And then whether or not this is targeted, I think Signature is a peculiar situation because they got sent into receivership on a Sunday afternoon and they didn't get shut down by the FDIC. It was the New York Department of Financial Services that stepped in and shut them down, which is a bit odd. They didn't even get the chance to open on Monday and have a fighting chance to keep their business. They were sort of shut down abruptly on a Sunday afternoon. And then obviously after that, you had Silicon Valley Bank, or it might have been that same. I think Silicon Valley Bank happened right before Signature. Obviously that it's a bit of a different case because their problem stemmed from their mismatch on durations with mortgage-backed securities, which if you dig into that, it was pretty piss poor risk management on their reserve side of things. That's Silicon Valley Bank. But yeah, Silvergate, Signature, and Silicon Valley Bank were three of the cornerstone banks in the Bitcoin industry. And so it was a bit of a hit, but like I said, we were being proactive at 1031, making sure our portfolio companies were being proactive. And right now what you'll see in the space is many of these companies have, it's pretty insane to say, but like 5 or 6 bank accounts at different banks across the country.
Wow. Yeah, it's nuts. I mean, like when we went to start Bitcoin mining, it was hard to just get a bank account for that. I mean, this was a couple of years ago, and when we first even bought miners, we bought them overseas, and like 3 weeks later, I get this call from some random like compliance guy with our bank that we used, and he was like, "We got some suspicious wires here. Like we have to investigate these or whatever." And I just told him, I was like, "Here's what we did. Here's the receipt. Like, bought miners," and never heard back from it again. But it definitely was something that got flagged. And then when we tried to, and that was when we just had our traditional account with our existing company, and then we were just going to pay it out of that. And then because we were trying to open one for the Bitcoin company, and I think we ended up just having to go with like a local regional bank, of course, which people, oh, let the regional banks fail, all this stuff. And I'm like, it's a lot of entrepreneurship with regional banks. I mean, it was ultimately just a regional bank that like we had a relationship with, and they're like, yeah, whatever, we don't care. We'll do Bitcoin mining. We'll help you guys out. And like, we don't do a ton of volume with them. So there's not like a bunch of complicated transactions, but it was an issue then. And that was before a lot of this stuff is ratcheted up. Like, how does this play out into the future? Like, do you think the SEC and these regulators just want to like a reset where they reset it and, put in these really strict KYC and all these restrictions, and then like open the door for the legacy guys? Like, JP Morgan and Goldman and all these guys, or do they just want to wipe it off the face of the earth?
I don't know for sure. There's like two tracks I'm thinking of right now. So you have the broader regional versus systemically important financial institutions, the formerly too big to fail banks. They changed the vernacular on the go there. They're now sci-fi. They're not TBTF.
Yeah.
I think that's a problem that isn't specific to Bitcoin and quote unquote crypto. It's a bigger problem with the incentives that were laid bare when Silicon Valley Bank and Signature and then First Republic went down. I mean, the posturing from Janet Yellen and the FDIC, particularly, are essentially inciting a mass exodus from the regional banks up to the JP Morgans of the world. And that's something that affects every regional bank, not just regional banks that are banking Bitcoin companies. And so that's the precarious situation we find ourselves in. We're sitting here towards the end of Q2. Obviously, it's June 6th today. And so we have 24 days left in Q2. And then we'll find out probably end of July, beginning of August, the Q2 financials for a lot of these regional banks. And I think that is when we'll be able to see what has happened in terms of deposit flights from a lot of these banks. And I don't think it's going to look good personally.
Yeah.
And so that's a broader issue than Bitcoin and crypto. When it comes to like the SEC, the last 2 days filing complaints with Binance and Coinbase, like you said, this has been expected. I think Binance and Coinbase will be fine. I don't think they'll get shut down. I don't think you should hold your Bitcoin there. If you have Bitcoin there, you should really embrace the native properties of Bitcoin that allow you to take self-custody. You should never leave your coins on an exchange. But with that being said, the way I see it playing out is Binance and Coinbase just pay massive fines and go on their way, have to change their business practices a bit with what they're offering their clients. It seems with Coinbase, they really want to wind down the staking services that they offer for ETH and other proof of stake networks. And then Binance, they're accusing them of like wash trading, commingling funds, but Binance is this weird pirate of the industry that operates outside the US. And I think CZ, whether you like him or not, you can't deny that he's a pretty savvy businessman that is a bit of a cockroach and knows how to get out of these sticky situations. So I think ultimately they'll both survive. But yeah, when the SEC, I think, is just sending a message like, hey, you guys have been operating unregistered security exchanges and broker dealers and clearinghouses without getting properly regulated. And as a Bitcoiner who leans towards the anarcho-capitalist side of things, I don't like to see the SEC coming in and preventing the free market from teaching individual consumers lessons. But with that being said, like you said, this has been very obviously choreographed for almost a decade now. The SEC has been saying like, hey, it's very highly likely that you're dealing with unregistered securities. We're slow to move, but we are going to move. And it looks like we're just seeing the move now. And I may have my personal qualms with the shit coins and the crypto casinos that are Binance and Coinbase. But at the end of the day, I think individuals are free to make decisions they want. If they want to trade shit coins and think they found the next Bitcoin, they should be able to do so. I think getting burnt is the fastest way to learn. It is sad how much money and capital has been wasted in that part of the quote unquote crypto sector. But again, these are lessons people have to learn. I don't think crypto is going to be here in the long run. Again, that's why at 1031 and everything I do, from the media to the mining to the venture, is focused on Bitcoin and Bitcoin only, because I believe this crypto phase is just an ephemeral early stage phenomena that's just simply driven by lack of quality information in the market.
I think like in a lot of ways, it could be a healthy thing in some ways to like burn out some of the dead grass and the bad actors. I do worry about the ability to have privacy. I know you and Matt talk a lot about, using Bitcoin with privacy, self-custody practices, things like that. It seems like if the end game is that they don't expect the industry to go away, whether it be Bitcoin or crypto, they want to play by their rules. You've seen in other countries and other places, laws around, having to register your hard wallets and, really like, is there a future where it's still going to be an option to use Bitcoin privately without breaking laws, without, putting yourself at risk? How do you view that in your portfolio at 1031? Do you guys worry about that?
We don't really, I mean, I don't think worry is the wrong, we expect it. We expect the governments to overreach and try to thrust these overbearing regulations, particularly around KYC and AML laws and compliance and the travel rule bullshit. We expect them to turn up the heat and try to thrust those types of regulations on not just the industry, but I think they will try to attempt to thrust it at the protocol level too. I don't think they'll be successful, and that's a concept I believe Nick Szabo popularized it, is when it comes to making Bitcoin easy to custody and then easy to use privately. Like the whole goal from a technology standpoint, from the software standpoint, is to make the cost of regulation too high. And so you make it, the way you do that is you make it extremely easy to self-custody and use Bitcoin privately. And yes, that's part of our focus at 1031, is investing in backing companies that are building tools and products that make it easier and more intuitive and out of the box native to use Bitcoin as privately as possible. Because the way that they would try to thrust these regulations on are using chain surveillance tools like Chainalysis and Elliptic, and using their heuristic analysis to essentially enforce the laws that they want to thrust on the network. But the whole goal, again, going back to making it too expensive to enforce, is to destroy that heuristic analysis. And so we don't need to get too technical here, but there's ways in which you can use Bitcoin very privately, and there's things that are getting added to the protocol and on second layers that make it easier than ever to do that. And so the goal in the industry is just to get products and services to market that make that as intuitive, easy, and native as possible. So it's effectively becomes impossible to have any chain analysis heuristics that are accurate or reliable.
Yeah, and in some ways I worry that like that will be kind of the one of the choke points. I mean, like even with recently with Unchained was using their newer service where they can, I think, can they buy and sell or just sell? They can buy and sell Bitcoin, right?
It's very easy to buy. Selling takes a bit more. I've sold through Unchained, and they're working on making the sell side of things much easier. You can sell, but it does take more compliance.
There was a lot of compliance. Like they helped me last year at the end of the year, just kind of take some losses and then buy the Bitcoin back, for tax reasons. And basically it just seemed like a lot of, it was like pretty, like, where did every one of these sats come from? I mean, they needed to have all this information, and it wasn't that surprising to me, but it just seems like, if you want to be on the up and up, I just worry that in the future there will be such strict, guidelines around that, to be able to kind of track, making sure like for example, could you get in trouble if someone paid you in Bitcoin and then later you went to go put that on exchange and they were like, found out that Bitcoin is somehow dirty, right? Like they're like, oh, that's dirty Bitcoin because you got it from this person who got it from whatever, and we have this flagged, right?
Yeah.
Like, I don't know.
Yeah, and so they would,
like a thing,
right? Yeah, right now they would identify that quote unquote dirty Bitcoin using tools like Chainalysis and Elliptic. And like I just said, like the whole goal is to make it so these heuristics are unreliable. And so you set up tools and wallet software that you just use, and it, like as you use it, whether it's doing something like a pay join, pay to endpoint, where you combine inputs and it's hard to know where the Bitcoin ends up, whose wallet it ends up in. At the end of the day, it makes it impossible to do that type of analysis. And so it's certainly coming. And then this gets to a broader subject, which is KYC AML regulations in the first place. Like they're completely ineffective. I think there's stats out there like KYC AML regulations have proven to only prevent 0.1% of global money laundering. They're completely ineffective, and they actually, like, this is something Matt and I say, Matt more particularly says on Rabbit Hole Recap, is that KYC AML is the illicit activity, because the compliance that is thrust on these companies, which forces them to collect very personal data from their customers, is probably actually done more economic harm than the prevention of money laundering or illicit money transfers that the compliance is actually trying to solve. So when you're collecting all this information, you're getting social security numbers, phone numbers, home addresses, email addresses, amount of Bitcoin owned, stuff like that. Like that just sits in these which have proven to be insecure databases that hackers go after. They want to get these honeypots of KYC AML data, because that will allow them to, to then go SIM swap people, to steal somebody's identity, to get a credit card under their name. And the economic damage caused by this data collection that has been thrust on everybody due to AML KYC laws far exceeds the crime it has prevented from a monetary perspective. And so when it comes to pushing back against this, I think that's one thing. And that's one thing we try to do on our shows, is really highlight that these regulations are ineffective. All they act as essentially are regulatory moats for incumbent actors in any industry that they're thrust on, because the cost to comply with all the regulations that are coming out is so high that a startup really can't afford those costs. And so it prevents competition from flourishing. It puts individuals in harm's way with the data collection. And so, to answer your question, I think as a society, we need to have a broader conversation about the effectiveness of KYC AML, or more importantly, about the ineffectiveness and the harm it's doing, and really create a social movement against these practices, and just say, hey, FBI, CIA, ATF, whoever, you got to figure out a way to do your job better. You can't put all these people in harm's way just because you want to stop 0.1% of global money laundering.
Well, you couple that with what's going on in AI, and you look at how dangerous it's going to be. I mean, if someone now gets a hold of your information through these, what you just mentioned, and they have all that data, all those data points in the very near future. I mean, it's already happening with deep fakes and all these things. It's like, not only could they have your info, they can basically look, sound, and be, essentially. I mean, at least virtually, they could be you. I mean, I don't know, man. I don't know if you guys have talked about that much, but that seems like the KYC stuff kind of is a Pandora's box for AI here in the future.
Yeah, imagine if AI gets access to all that data and just creates a user profile for you, and can, I'm screwed, you're screwed. We have podcast with audio and video where hundreds, thousands, tens of thousands of hours at this point, where if an AI just scraped my podcast data, they could easily create very real deep fakes of me and you. No, it's a problem. It's and going back to how does another way Bitcoin solves this in the long run is inciting the circular economy, because a lot of these KYC AML issues become moot if you're simply transacting peer-to-peer with Bitcoin. If you don't have the need to send your Bitcoin to an exchange to liquidate it, and then have to answer questions with the exchange, it's much easier to operate as a Bitcoiner, because you're not forced. You're transacting in a peer-to-peer manner, and your counterpart isn't some business with a hefty compliance department. It's an individual you're interacting with in an economic transaction. So that's another way to really nip this in the bud as well. And that's something that's another area at 1031 that we like to invest in, is companies that are really pushing the circular economy, of making it easier for people to just have Bitcoin and spend it without having to liquidate it for dollars first.
Yeah. No, it's interesting. You make a lot of good points on that, and I hadn't really thought of. Moving to the media side, we haven't really talked since maybe Elon was doing the Twitter thing. It's been kind of in the last year, and I think we haven't talked over a year, but just your thoughts on Elon taking over Twitter. My perspective's changed a little bit on him. I had my kind of previous Tesla Elon perspective, but everything he's done since then, some of the things he's done that seem maybe that aren't in his best economic interests, but he's pushing forward like it's altruistic, but I don't know what to think. I'd love to get your take on it.
Yeah, I don't know. I'm very confused. I don't know. Elon confuses me. It does seem like he's definitely posturing like he cares about free speech and bought Twitter to preserve free speech. And there are certainly examples of people coming back to Twitter and the conversation being more open, which I've experienced and have observed, which I like. And there's other things like the blue check verification, which Matt hates and he trolls me about because I have a blue check. But he wants to turn Twitter into X.com. Then he wants to make that like the WeChat of the West. And that does give me caution because unless he does it the right way, which I think would be incorporating Bitcoin in a non-custodial fashion in some way would be the right way, but I'm not sure he's going to go down that path. I think there could be very draconian and Orwellian ways in which Twitter could go. Like we could be in the happy honeymoon phase where everybody's like, rah, rah, we're all getting our free speech. But if he incorporates all this financial, excuse me, and payments functionality into it, it comes with all the KYC AML BS we just talked about. It could end up not being what we thought it was going to be. This could be the honeymoon phase.
Yeah, what scares me about it is like he's done the altruism thing before, right? That's how he became the richest man in the world. Was like, I'm going to save the planet, making these green vehicles, these green electric cars, and got like all the environmentalists and progressives and all these people that want to, drive a fancy car that no one can afford, but it's going to save the planet. And that's how he made his fortune. And he was very much playing that card of like, I'm the good guy, right? Like I'm using capitalism to save the planet, and I'm going to make this product that's going to help everybody. And then really like he's just making a luxury car. I don't know that he really cares about how green it is. He says that he does, but he's used that as kind of a vector to get into those people's pockets and gain that trust and then become fabulously rich from it. So I just worry about Twitter and all the posturing that he's doing, because ultimately like I do like what he said lately. Like, he on that interview where he's like, I don't care or whatever. Like he did the Princess Bride quote where he's like, he's like, I don't care about these things. He had the interview with Robert Kennedy Jr. and he was like, I don't care about losing money or putting myself at risk with the Twitter files thing, which the Twitter files were awesome. Like, that's why I'm conflicted. I'm like, this is good stuff that you're doing, but I just have this nagging feeling because of his track record. I'm like, I don't know. Like he's done this kind of before. Like, where's it leading? You know what I mean?
Yeah. And that's, yeah, again, like it's there. Like I liked a lot of what I've seen out of Twitter, and again, what they're doing with the spaces, having DeSantis do his announcement, and then Bobby Kennedy yesterday with his long spaces. That's sort of been a forcing function for other platforms like YouTube and Facebook to become looser with their restrictions in terms of the conversation around election fraud and COVID. Like I noticed on Spotify, they took off all the COVID disclaimers that I've had on my show for over a year now. And so I think Twitter has certainly acted as a forcing function in that direction to force other platforms in the space to engender free speech on their platforms. But yeah, again, I don't know. I'm cautiously optimistic. Actually, I'm actually not even that optimistic, but I'm not optimistic. I think the pressure and the roadmap he's put forth at X.com, particularly, I think that's where the signal is, like wanting to become the WeChat of the West, unless it's done in a way. And again, I am a Bitcoiner, but like I truly am, because I believe the only way to do this in a non-dystopian way is to enable peer-to-peer functions using Bitcoin. If you were to incorporate Bitcoin into it in that fashion and not have like a custodial wallet, I think that would be incredible. And I would eat crow and apologize for not being optimistic. But until that happens, I'm a bit pessimistic on the long term. But there are, again, honeymoon phase. There are some positive externalities that have come from the way he's operating so far.
Yeah, I mean, Jack's probably in his year some. I don't know how involved he is. I think he still owns quite a bit of equity, right? And he's clearly
so, yeah.
a big advocate. So I'm sure there's something there. I don't know how much influence he has, but so maybe there's some hope. One thing that Kennedy said on that Spaces that I thought was really interesting and that I did not know is that the U.S. is one of only two countries, I think he said U.S. and Australia, that allow the pharma industry.
New Zealand.
New Zealand, that's right, allows the pharma industry to put out ads on media.
Yeah.
And then that kind of leads you down the rabbit hole of like, media, and you obviously, like you mentioned earlier, media is like a core pillar of your businesses, and the influence of advertisers and how that affects media. And you look at, like, I mean, even I've experienced it at a small scale. I haven't had many sponsors, but I had like a Bitcoin mining sponsor for a while. And, look, if I had to come out like right after I signed that and been like, pumping some shit coin or like saying that I didn't like Bitcoin, like they probably would have, that would have been viewed negatively. And that's like at a small scale. So just like your thoughts on the media business, and can Elon even do what he's trying to do? Is there even a way to basically break free from that? Because he made mention multiple times that their business has basically been decimated in response to this idea that people can say whatever they want on the platform.
Yeah, and that's what I think he's tried to do with the subscription model, which is why I was willing to pay. Like, I've used Twitter for well over a decade now. I believe I've joined in 2011, and it's brought in a tremendous amount of value to my life. Again, we talk about podcasts as an incredible networking tool, but the Twitter was the networking tool that allowed me to start the podcast. Like, I use Twitter DMs to get a lot of, I still do to this day. That's how I get most of the guests on the show, is via DMs. And Twitter as a tool, whether it be networking or just a pure source of information that I've learned how to filter and use to my advantage, has been incredibly beneficial to my life personally. And so when he opened up the subscription floodgates to pay, that's why I was happy to pay $8 a month, get a blue check, even though some people don't like that. But I think that's certainly a signal like, hey, we're going to try and monetize other ways. And me personally, I think subscription models are a great way to do that. And I'm willing to pay because, again, Twitter's brought me tremendous value over my life. With the subscription model, again, we'll beat the dead horse here. I do wish you could do it with Bitcoin and not have to give your phone number, credit card information, email address, all of that. That would be really cool. And then, yeah, from the media perspective with the advertisers, yeah, advertisers have a lot of power and it's something that people need to be aware of. And in terms of what we have advertisements at TFTC and RHR. And what I just try to do is align with companies that I actually use, and I understand their businesses, and I know the founders pretty well and know them to be good people, and sort of align with them. And something I can feel happy talking or shilling to my audience. And then on top of that, when they make mistakes, that's one thing that sets us apart, I think, at TFTC and RHR, is that we are critical of our advertisers when they make mistakes. We've had data security breaches. We had a whole thing with Compass mining. We're very transparent about all that, and it's something we tell advertisers up front. It's like, hey, if you fuck up, we're going to be critical, because we have to be, because we have this two-way sort of information flow with our audience, and the ones that get it, and they understand, and they're adults and able to take the criticism when it comes. But in terms of monetizing a media business, what we've decided to do is just partner with companies that we use and that we feel comfortable shilling, because we do use them, and then being upfront with them, like, hey, if you mess up, we're going to be critical. Hope that doesn't muddy the waters, but it's just par for the course when you engage with us. But yeah, more broadly, big pharma, energy to a certain extent, whether it be fossil fuels or green energy, banking, all that, they do have a lot of control over the mainstream media. And that's what Elon articulated yesterday during that Spaces, and I imagine it's all pharma driven. It is pretty disgusting that we are one of the two countries that openly shills pharmaceuticals to the masses. And a lot of this stuff is just making people sicker, less healthy, and something that I would prefer we focus on from a healthcare perspective here in the United States, preventative care. Like, why aren't we teaching people how to be healthy and actually not get to the point where they need pharmaceuticals?
Yeah, for sure. That's a huge rabbit hole to go down. And some of the stats you threw out, like the amount of deaths in the US is like 3x other countries. And maybe that's correlated, maybe it's causation. But another interesting storyline, and I'll tie this all together in a second, but like this LIV PGA thing, right? And like there's an interesting link here that also kind of has similarities to Elon and Twitter, whereas Elon used like consumer goods and, basically his business in Tesla to get the funds to buy this media thing, this media, powerhouse. And now, the PGA Tour is like using Saudi oil money basically, versus just having advertisers, because, the primary source of their income is probably ads. Now they have basically an unlimited piggy bank via the Saudi wealth. And can that push them in directions that, they're not as reliant on ad dollars? They can basically get the consumers to pay more, go to more events, get more ratings. TFTC started a Bitcoin mining company. You guys have an energy business, so now you've got other income sources that diversify away. This is kind of like, I don't know if those tie together at all, but like I'm sort of seeing like this trend where like, maybe the traditional ad controlled media and ad controlled sports and everything else is like, we're seeing some instances now where these consumer choices, like the fact that everybody wants to use oil, or the fact that Elon got a lot of money from Tesla, it's like now kind of funneling in another way. It seems like I don't know if maybe that's a loose connection there, but I just kind of thought of it as we were talking.
Yeah, I've only seen tweets about the Live PGA merger, which I was pretty shocked to see that happened so quickly.
Yeah.
But yeah, no, that's another thing in modern day. I think if you're an entrepreneur, and you know this well, and I think we both share this sort of mentality, is just have multiple revenue streams. So I've got the media, venture, mining, which has made my revenue stream pretty robust. And one thing will do well one year, another thing will do well another, and sometimes they all do well at the same time. And that's just
Right.
made me more secure as an individual. But yeah, then when it comes back to like advertising and podcasting, that's one thing we should mention is this emergence of podcasting 2.0, popularized by Adam Curry, who invented podcasting and incorporates Bitcoin. And so Adam's main show, No Agenda, him and John C. Dvorak have been running that for, I believe, 15 years. Yeah, I think they started in 2008. And that's been a pure, their monetization model is value for value. Their listeners, if they get value from the show, Adam and John ask, hey, send it back to us in monetary form, or by providing value in the form of art, or meetups or stuff like that. And they've been able to sustain their business for 15 years. And now with podcasting 2.0, any podcaster can do that using Bitcoin. And that's something we've incorporated into our monetization model at TFTC and RHR over the last year and a half, almost 2 years now, is podcasting 2.0, value for value. And what we do is we put a Lightning network, a Bitcoin address, essentially in our RSS feed, and now you're finding there's podcasting apps that have embedded Bitcoin wallets. And so as listeners listen to our show, they can either stream us Bitcoin per minute listen. They set their rate, set it and forget it. They listen. And as they listen, Bitcoin streams from their wallet to our wallets. And then they could also boost. So if they liked a particular episode or a particular part of a particular episode, they can send us an extra tip on top of what they're streaming. And that has allowed us to create another monetization vehicle for the podcast, which we hope can replace advertising at scale at some point in the future, where it's completely user generated revenue and we're not dependent on corporations to fund the ad side of things.
Yeah, it's huge. Anytime you can have those multiple revenue streams, and to your point, sometimes some are working and others aren't. When you have different businesses, sometimes the worst is when everything's struggling, which usually doesn't happen. There are times when you're stressed out about all of it. Most of the time, it's good. It's like something's clicking somewhere, and you're getting wins, even though something else may be like in a slog for whatever reason. The only stressful time is when everything's in a slog for whatever reason, which can happen, but usually it's brief. I think the diversification is good. Pivoting to like the mining side, just thoughts on where things are at. I mean, you've got the halving coming up. We have looked at deploying more hash. We've got our main site that we have. We've had some miners break, and it's like we're tasked now with like, do we repair these or do we buy new ones? I think the payback periods are pretty low with the price of the miners now. It's like less than a year, depending on your price of energy, or maybe it's around a year. But I just am wondering your thoughts going into the halving. It seems like as we approach that, which is going to be here quicker than we think, time goes by quick. Just your thoughts broadly on mining, and then what do you think is going to happen with like the price of ASICs and just mining economics as we approach that point.
Yeah, I mean, it's a great time to be building right now in the mining industry. Tom, Matt, and I at Standard are aggressively building out as much infrastructure as possible. Like you said, ASICs are cheap, transformers are cheap, boxes are cheap, and so if you have the capital and the access to the energy, it's a great time to be deploying and building right now. So that's our view. We're essentially building, and this is how it typically works in Bitcoin. I tweeted this out earlier today, and it's a bit cliche, but it is true. Like the best building, the most profitable businesses are built in the bear market, particularly in mining. And so what you see with these mining cycles is you'll have massive booms and bust, and we're on the back end of a massive bust, the biggest bust that has probably ever happened in the industry. It's probably the worst bear market for mining ever. But again, if you have access to capital and energy and infrastructure, it's a great time to be deploying that capital and building that out, because I think the value prop of Bitcoin has never been clearer. I think when you look at what the Fed's doing, what the Treasury's doing, where the debt situation is, where the Treasury general account is, like it's pretty clear that at some point, who knows exactly when, but they are going to need to print a lot of money to fix the problems that are systemic throughout our banking and financial system. And Bitcoin exists just for that, as a way to avoid a lot of the problems that stem from the inflation that will inevitably come from that. On top of that, it's just a better money. It's a harder asset, and you can send it over the internet. And so that value prop sort of separated from the money printing. Like even if they weren't printing money, Bitcoin is superior in many different ways. Yeah, I think it's a great time to be, like you said, ASICs are really cheap. I think you can get like an S19 XP for like $4,000 to $4,500 at the height of the bull market, when the futures orders were popping off. I think they were selling for like 13 or even 15 grand at the height. So they're significantly depressed. And the nature of the ASIC market right now is that we had all these blow ups in the mining industry. A lot of people run into the wall and go bankrupt or just have to fold. And so with the market for ASICs, the secondary market is still relatively flush. So I think what you're seeing is a lot of operators just buying ASICs on the secondary market from people that have blown up or are looking to get out of the market. And meanwhile, yeah, the manufacturers and Bitmain, MicroBT sitting with large inventories of new gen models. And so right now, I think is like the perfect time to be building as we approach the halving. Again, past performance isn't indicative of future results, but I'm pretty confident that Bitcoin will continue to go up into the right in price. And those who are building right now, excuse me, sorry for burping, those who are building right now and setting themselves up for when that bull market does come are going to succeed massively.
Yeah, and energy's cheap too right now. I mean, like natural gas, there for a while, you guys were hunting for gas sites. We were looking at different deals. Prices ran up. It got really expensive. It went from really cheap to really expensive. Now it's like really cheap again. You can get in basin natural gas. So like that's like the price that you receive net of the differential between Henry Hub, the index price, and what you get paid. It's like under $2 in a lot of these basins. So you could pick up really cheap energy today. And that's a good thing. And then it's kind of a hedge. I mean, it's been a hedge for us because we own natural gas. So whenever Bitcoin dumped, gas was ripping, and that really made last year a good year. And now they're kind of both sort of down, but like it's not going to stay that way forever. Natural gas is very supply demand, and you're seeing the drop off in activity. So now's a good time to buy energy too. But I wonder with like the ASICs, like, do you think when the halving hits, if Bitcoin has yet to pump, will there be like a window of time where that they get like ultra cheap, like even cheaper than now? Or is there like a floor price to these things? Like, where does it go if Bitcoin's in this range, hash rate grows, and then like the halving hits?
Yeah, it depends what model you have. So the newer gen models, the XPs, the M50s, it'll probably be fine with those plugged in. But yeah, as you get to like the S19J Pros, the M30Ss, the M20s, and the S17s and the S9s, particularly, depending on where your electricity costs, unless it's very low, around like 2 to 3 cents for the M20s and the S9s, you're probably gonna have to turn those off. But yeah, who knows? Like you can never predict what the Bitcoin price is going to do. What I advise is like if you have the newest gen models, you're probably going to be fine. But those sitting with older gen models, you want to really be focusing on driving your electricity price down as low as possible, preferably to like 2 or 3 cents if you can get it, which is very hard. But yeah, just it's certainly possible. Hash rate is ripping. That's another interesting thing with this bear market. Mining is really becoming legitimized in many different ways. Two predominantly, it is becoming abundantly clear that Russia is mining a lot of Bitcoin. If you talk to any of the brokers who are selling ASICs, they'll tell you that they're doing a lot of business in Russia. You had the Kingdom of Bhutan up in the Himalayas. They got swept up in the BlockFi and Celsius bankruptcies. They had accounts there. And so it became apparent to the market that their sovereign wealth fund has been allocating to Bitcoin since 2020, I believe. And they came out and basically said, yes, we have. Actually, we've been mining Bitcoin as well since 2020 using the excess capacity at our hydroelectric dams. And they even doubled down. They just entered in a partnership with BitDeer to expand their mining operations by, I believe, 250 megawatts over the next year and a half. And so you have nation states directly mining Bitcoin. You had Abu Dhabi and Marathon Digital here in the U.S. Enter in a joint venture. So you have a little city state, the UAE, beginning to mine Bitcoin, rolling that. I don't think it's their sovereign wealth fund. I think it's like a bigger fund in Abu Dhabi, but it's pretty interconnected. And then here in the United States, just something we've seen at Standard, and I think a lot of other legit players in the space are saying is that the sort of embedding of Bitcoin mining into stack of energy providers, whether it be oil and gas or utilities, is becoming very clear that it does provide a benefit. And I think this will be the bear market here in the US that we look at back on in retrospect and say, hey, this was the bear market where the energy companies began to really get it, and the smart ones began to embed it into their stacks pretty aggressively. And so product of that is hash rate has still been ripping, not as quickly as it was earlier this year, but it's still going up. I believe we have another 1 or 2% upward adjustment coming in a week here. Yeah, the hash rate is ripping. We also had the old ordinals craze, or I don't even know how you would define it, but essentially miners have been blessed with a windfall of revenue in the form of Bitcoin transaction fees. The congestion on the Bitcoin network has significantly increased due to people embedding data into blocks, and that has pushed the fees to get a transaction included in a block up. And so even if the price is hovering around 26, 27, miners are seeing more revenue in the form of fees, which has been good. If that can continue, even if the price stays flat, you could see a unique situation around the halving where miners, even with older gen models, are able to stay on because the fee revenue is making up for what they were missing out on. But yeah, this is all yet to be seen. A lot going on. The name of the game is just be aware of what model miner you're using and where your electricity cost is, and try to prepare for your revenue getting cut in half at some point next spring.
Yeah, absolutely. I've been shocked by just the resiliency of the hash rate. I've always said, and I didn't make this up, I heard someone say it and I thought it made sense, was that might have been Adam Back or somebody, but someone said like basically the biggest risk to Bitcoin was like a long-term decline in hash rate, like over a sustained multi-year period where it just declines and declines and declines. So have not seen that. And I don't know your thoughts on that, if you think that is a risk, but I mean, obviously the network adjusts, but if for whatever reason the incentives weren't there, like for a very long period of time, I mean, could that even happen? It seems like this fee thing is good news. I know a lot of people have hated on ordinals, and I'm kind of like free market capitalist guy. It's like, well, if they want to do that, then, and it allows, the technology allows them to do it. I think I even mentioned something, and you were like, I even mentioned like media on the Bitcoin blockchain and like in our first podcast, and you were like, that's not going to happen, but it kind of is in a way. But I don't know your thoughts on any of that stuff.
Yeah, I mean, they're valid transactions. So that's just something you have to live with. They're valid. I particularly don't find NFTs or any of the ordinal stuff appealing. I think they're very lowbrow, if you, I don't know if that's the word I want to use. They're not aesthetically pleasing, number one. I think it's just people trying to flip things and take advantage of hype to stack more Bitcoin. In the long run, again, there's competition. Block space is scarce. So there will be competition for that block space. And as Bitcoin continues on its adoption phase and more people turn to Bitcoin as a monetary good, I think that stuff will get priced out. The utility it provides as a monetary network is far superior to what it provides as embedding a JPEG database, essentially. So I think if I were to put my money on it, this is a ephemeral trend that'll get priced out at some point. But again, they're valid transactions. As a miner, I've loved the revenue. And in terms of like the hash rate declining, long term, nothing's impossible. I would put it very low probability because again, whether you're a sovereign nation or an energy company, the value and the utility that Bitcoin mining as a tool in your stack provides is undeniable. It's becoming undeniable to more and more people.
Yeah, for sure. One topic I have heard people say a lot, and you see a lot of like the speculative and the rumor mill and the conspiracy theories around Bitcoin's latest, like the last times it's pumped really high, was that it was all because of like FTX and Binance and like these like, spoofing things where they basically run up the price. Do you worry if like the Binance FTX is gone now, Binance is gone now, like the drying up of liquidity with chokepoint 2.0? Do you worry about Bitcoin's ability to have those massive price pumps in the future without like these large players coming in and having so much liquidity and pushing so much capital in?
No. Number one, because Bitcoin's global, and even if they try to kill it here and in Europe, it'll succeed elsewhere. And number two, I would actually argue that FTX, particularly, maybe even Binance as well, probably definitely Binance too, they prevented the price from going higher than it otherwise would have because they were actually not buying the Bitcoin or FTX. We can't say Binance for sure. There's a lot of speculation around it that they're fractionally reserved, but FTX, we know for sure, wasn't buying the Bitcoin. They were telling their users they were buying. In fact, they were taking user Bitcoin and selling it for shit coins. And so they were actually putting a lot of downward pressure on the price. So if like FTX didn't exist, you can make the argument that we actually would have gone much higher during the 2021 bull run. Some people think over six figures because FTX was essentially just taking people's money and gambling it on shit coins. They weren't even adding buy pressure to the Bitcoin market. If you go look at their books, they have something like, I believe it's like $4 billion in claims on Bitcoin that their users thought they had, and they actually had $6 million worth of Bitcoin on their balance sheet. So that's a 994 billion, a $3,994 billion worth of Bitcoin that they actually didn't buy. And so, yeah, no, it doesn't worry me. I think it actually, that's the other thing too, going back to like the KYC discussion we had earlier. And one thing that many people haven't internalized yet is most Bitcoin that exists and that is on the market is held in self-custody. And so as these FTX blow ups happen, as the SEC goes after Binance and Coinbase, that just incites people to pull their coins off the exchange and into self-custody. And that actually creates a liquidity problem, not for dollars, but for Bitcoin, which makes it very apparent how scarce it is. And so I think all of this stuff happening is actually good for the price in the long run because people get smarter. They pull their Bitcoin into their own wallets, taking that Bitcoin liquidity off of the exchange layer of things. And I think you actually get truer price discovery when this stuff happens.
Yeah, those are good points. It seems like Bitcoin's been pretty resilient, honestly. Like, if you really look at it, I know it's down from the all-time highs, which were fairly brief. Honestly, they were kind of spikes, which has happened in the other cycles of it running up. And where it's at today, it's still a huge asset. It's really held pretty solid, kind of around these, sort of range bound price. And to me, it still seems fairly bullish. I haven't listened to Saylor, any of his interviews in a while, but he did talk recently, and he was still throwing out all the stats of since they've bought it and how well Bitcoin's price has performed against like every other metric pretty much. I mean, sure, you could pick individual securities and maybe there's some that have outperformed it, but like the Nasdaq, the S&P, gold, bonds, I mean, really there's nothing he could have done in that time frame that would have done better, at least from when they first started buying. I don't know about all of his buy orders, but it seems pretty resilient. Like, I guess here at the end, like, give your case of why we're going to win, because you always say that, like, we're going to win. So what's the case?
There's many cases to be made. It's an idea whose time has come. And when you juxtapose what's going on in Bitcoin, it is a shame that, again, the baby gets thrown out with the bathwater. People see Celsius, BlockFi, FTX, and similar sagas, and they equate that with Bitcoin. But if you're actually in the industry and you know what's going on, I've never been more bullish in terms of what's happening in Bitcoin. Like we just said, hash rates sitting around all-time highs. You have mining really becoming an integral part of energy systems. You can look at on-chain metrics. The amount of wallets with over 1 Bitcoin is growing every day. The amount of Bitcoin being held off the exchanges is growing every day. The amount of people holding Bitcoin in wallets for longer than a year, 2 years, 3 years is growing every day. People are, whether the masses realize it or not, people are waking up to the value prop of Bitcoin. And again, the Fed, the Treasury, the federal government are really making Bitcoin's value prop abundantly clear with how they're managing the monetary and financial systems. I think people the average Joe does have this unnerving feeling that something has gone awry in the financial system and the economy. Again, I do think the Fed's hand will be forced at some point, who knows exactly when, to print an insane amount of money. Like with the debt ceiling, like they just suspended it. So we're sitting at 31.4 trillion in national debt here in the US, and there's no cap on that between here and 2025, but realistically 2026, because that'll be a lame duck period where you have to get all the committees formed and stuff like that. So we probably won't approach the debt ceiling again until 2026. And then the CBO, the government agency, is predicting that by that time, the national debt will be well above 35 trillion. So we're going to grow another 10, 15% in national debt. And you couple that with the boomers retiring, and they're sitting on 80-20 bond stock portfolios, with bonds having terrible years here. And so you're going to have a bunch of boomers going to retirement with significantly less money than they expected. And then they're going to begin to wake up. And I'm extremely bullish on Bitcoin. Everything is working in its favor. Everything is good for Bitcoin, despite what you hear in the mainstream. The government will certainly try to clamp down, the federal government specifically, but I do think it's important to recognize the trend of states really sticking their necks out and standing up for Bitcoin and saying, hey, federal government, we're going to take care of this. We want our citizens to be able to access and use this stuff, so please leave us alone. I think that's a trend that's only going to get stronger as we move forward in time. And Bitcoin is a no-brainer in my mind. It's going to be some time before it's a no-brainer in everybody's mind, but I think inevitably it will be.
I tend to agree with all that. I think that I had Luke Groman on the other day, and an interesting point that he made is that no matter what the federal government does, it's inflationary, because whether they keep rates where they are, something like, they've got to recycle all this debt over the next 2 years, and they're going to be doing it at 5%. And so it's like the total amount of the fiscal budget is going to be like 40% of that going to service debt, whereas now in this last budget, it was like 10%. So they're just going to have to print more money to be able to pay for things like entitlements and for military, which we're just spending a bunch on that. That's not going away. I mean, what's happening in Ukraine is not going to resolve anytime soon, probably. So there's just so much money that needs to be there. And with the interest rates being higher, where's it going to come from? That, all of a sudden now they got a huge gap they got to fill, or they drop interest rates and the money printer goes burr that way. So his argument was kind of like all paths lead to asset price inflation. He's clearly someone who's bullish on Bitcoin. And I just think, given the scarcity of it, regardless of everything else, it is incredibly scarce. And if you believe in hard assets, as a short against the dollar, it just seems inevitable that the up and to the right will happen, along with all the other use cases we talked about. I mean, the number go up thing is what draws a lot of people in, but there's a lot of benefits other places as well.
Yeah. Yeah. It's, again, like, I think if we just stayed at a steady state here, no inflation, like Bitcoin's just superior in every way. It's money, it's native internet money that you can send peer to peer. You can embed it in things like podcasts, RSS feeds. You can embed it. I mean, we just invested in a company, a 1031 Vita, that's embedding it into VoIP and SIP protocols, so telecoms. Like, and the network side of Bitcoin solves a lot of settlement problems and spam problems that exist all throughout our digital world. And so, just even if the Fed were to perfect monetary policy and everything was going to be okay, the network side of Bitcoin is far superior than anything we have on the planet today. And that alone makes me really bullish. But when you factor in the mismanagement of the monetary and debt situation, I think it just adds fuel to that fire.
Absolutely, man. Well, Marty, thanks for coming on. Where's the best place for everybody to find you? You mentioned earlier, where do they go get your stuff?
Just check it out at Marty Bent on Twitter, TFTC.io. If you want to read the newsletter and check out the podcast, search Rabbit Hole Recap in your podcast feeds as well. And then 1031.vc if you want to look at some of the portfolio companies or all of our portfolio companies and the companies that excite us within Bitcoin. If you want to see the companies that are actually building the Bitcoin standard that we will live under at some point in the future, we think our portfolio is pretty indicative of the pillars of that standard.
Absolutely, man. It's great talking to you. Hopefully we'll do this again at some point.
It's always a pleasure, Max.